This is Nightly Business Report with Tyler Matheson and Susie Garrett. Funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
Yellen speaks and the markets listen and take off after the Federal Reserve said it would be patient about raising interest rates. An historic overture. President Obama says America will normalize relations with Cuba, reversing 50 years of U.S. policy and quite likely creating opportunities for business and investors. Ruble rebound. Russia's currency stabilizes after extraordinary measures from the country's central bank and finance ministry. We'll take you to Moscow for the very latest. All that and more tonight on Nightly Business Report for Wednesday, December 17th. Good evening, everyone, and welcome. Susie Garrett has the night off. Well, it was a day of major developments on multiple fronts and big swings up in the value of your stock holdings, the biggest, in fact, of the entire year. Start with the electrifying news that the U.S. will reverse 50 years of policy and restore diplomatic relations with Cuba. Consider that Russia seemed, at least for a day, to staunch the bleeding in its currency and top it all off with signals from the U.S. Federal Reserve that it won't raise interest rates for months, if then. That last news sent stocks on a late-day tear, and here's how things looked at the closing bell. The Dow logged its best day since last December. All 30 stocks ended higher, the blue chip average surging 288 points. The Nasdaq up 96, a more than 2% gain. And the S&P 500 rocketed 40 points, its best day in 14 months, to put the index back above the 2,000 mark. Now, the Fed's generally rosy economic outlook did put a chill in bonds. After yesterday's rally, Treasuries staged their biggest one-day sell-off in 3 months as the yield on the 10-year note rose, as you see there, to 2.136%. As for oil, it was another day of wild swings. Chevron, ExxonMobil among the biggest gainers in the Dow after domestic oil dipped to a fresh 5.5-year low early in the day, but then ended 54 cents higher per barrel, as you see there, closing at 56.47. International Brent crude started lower, too, before it closed more than $1 a barrel higher at 61.18. Hampton Pearson wraps it all up today for us on the Fed's decision and when policymakers may begin raising interest rates.
A growing economy has the Federal Reserve moving closer to raising interest rates, but Fed Chair Janet Yellen and her fellow monetary policymakers say they will be patient in determining when to raise those rates. But that's not, she says, a policy change from the considerable time guidance.
It seemed less helpful to continue to communicate about the possible timing of our first rate increase with reference to an event that is receding into the past. Instead, we have shifted to language that better reflects the committee's focus on the economic conditions that would make liftoff appropriate.
Another reason for the patient approach, 2014 has been the best year for job growth in 15 years, with unemployment down to 5.8%. And the Fed sees a possible move next year closer to its full employment target of 5.2%.
The pace of job growth has been strong recently, with job gains averaging nearly 280,000 per month over the past 3 months. Over the past 12 months, job gains averaged nearly 230,000 per month.
Unless there's a surprise in the economic data, the Fed chair says she foresees no interest rate hike during the first quarter of 2015. An updated economic forecast shows the central bank lowering its inflation forecast for next year to between 1 to 1.6%, still below the Fed's target of 2%, taking into account the recent decline in oil prices.
The decline we have seen in oil prices is likely to be on net a positive. It's something that's certainly good for families, for households. It's putting more money in their pockets, having to spend less on gas and energy. And so in that sense, it's like a tax cut that boosts their spending power.
The Fed chair says the biggest mistake market watchers could make is to assume that a rate hike will only be announced after a meeting where there's a scheduled news conference. The Fed chair says in 2015, every meeting will be live where we could take action. For Nightly Business Report, I'm Hampton Pearson in Washington.
Bruce Kasman joins us now with more analysis on the Fed. He's chief global economist at J.P. Morgan. Bruce, welcome and welcome back. Stocks rallied strongly today. Bonds sold off today. What, respectively, did stock and bond investors hear from the Fed, and did they get it right?
I think broadly they did. I think what you're getting from the Fed here around the meeting where there's a lot of messaging is basically a story that says they feel good about growth. They feel with that growth that they're more likely than not to start tightening at the June meeting. And they're not particularly worried about the risks related to Russia or low inflation in terms of inflation expectations. So it's a very upbeat message, which affirming of the guidance towards June with a little bit more commitment here that at least the next two meetings they're not doing anything. So
they certainly suggested, didn't they, Bruce, that not only will they be, quote, patient, but that they will also be restrained with whatever the pace of rate raises turns out to be.
That's correct. And what you saw today was a forecast revision where the Fed both lowered its inflation and unemployment rate forecast, but actually lowered its guidance there in terms of what it's forecasting for rates out for 2015 and 16. So a slightly softer path of rate hikes.
So do you think that this means kind of a green light for equities over the next few months, or what?
Well, I still think the biggest issue here is the economy, how it deals with the dollar and energy price decline, whether there's concentrated damage done in credit markets or elsewhere. So we still have to watch what's going on, and I think that's going to be the key. We're reasonably upbeat, and we think it is going to be a good environment for growth. It is going to deliver the Fed tightening, but there's a lot of questions we still have to answer.
Lots of questions, but are we closer now, Bruce, to a level of certainty with what the Fed's policy is going to be? And a different way of asking that is worry about interest rates kind of off the table now?
I don't think that's true in the sense that once the Fed gets to the point where it starts raising rates, the path that it's delivering, even though it's a little shallower today, is still well above what the market is currently expecting. So I think we still have an event if the Fed gets to that point and starts delivering on its guidance.
You know, Chair Yellen talked about the fact that falling oil prices are a net positive for the U.S. economy. Do you see it that way, too?
I think it's a huge positive for the U.S. economy and the global economy, notwithstanding some concentrated pain that's being felt in some places in the world. Lower energy prices, a tax cut for consumers. It's opening the door for some monetary easing elsewhere in the world. I think this is going to be a significant positive, as it has been in the past in periods in which oil prices have fallen, not being accompanied by recession.
Do we need to worry about Russia?
I think we need to worry about global financial markets digesting oil prices. Russia itself is not a threat to the U.S. economy, but I think the concentrated hit in credit markets to lower energy prices is something to worry about, as well as the general problems I think we're going to have as emerging market credit cycles continue to unwind.
Bruce, interesting points, covered a lot of ground. Thanks a lot.
Thank you.
Bruce Kasman with J.P. Morgan. Now, more on the stunning news of a major opening to Cuba. After more than 5 decades of diplomatic chill, if not outright hostility, the U.S. will normalize relations with Cuba's Castro regime. The long-standing trade embargo remains in place, at least for now. Changing that takes an act of Congress, something the president's political foes on the Hill were quick to say they would strongly oppose. Now, both countries have already eased travel, trade, and money transfer restrictions, and more relaxation is now in the cards. So what will today's changes mean for both economies and for American businesses? Michelle Caruso Cabrera has more.
The U.S. will establish diplomatic relations with Cuba for the first time since the 60s and will reestablish an embassy in Havana. And while today's announcement doesn't end the travel ban completely, the White House says travel licenses will be much easier to obtain for family visits and educational and religious activities. U.S. businesses will be able to open certain kinds of financial accounts at Cuba's government banks in order to make it easier to process authorized types of transactions. U.S. credit cards and debit cards will be permitted for the first time for U.S. travelers going to Cuba. The U.S. will also allow the export of telecommunications equipment that's designed to increase the availability of the internet in Cuba. And the stocks of cruise companies and airlines rallied on the announcement on the anticipation that there will be increased tourism to the country. But many investors told us today they don't think these steps alone are enough to convince them to invest directly in the island due to the lack of rule of law and fear that the Cuban government, which still controls more than 80% of the country's economy, would not provide strong enough governance to ensure them that their investment is safe. Nightly Business Report, Michelle Caruso Cabrera.
Joining us now to talk more about restoring relations with Cuba and what it will mean for commerce is Fernando Donaire. He's Chief Investment Officer at Inca Investments. Welcome, sir. Good to have you with us. What is your initial reaction to this move about normalizing relations with Cuba, and how quickly will it lead to investment opportunities either for American businesses or for American investors?
Well, I think it's an important first step, and it's a very symbolic step in many ways. So the actual restrictions that are going to be eased, we don't completely know what they are going to be. We'll see that when the regulations are actually issued, but it is a symbolic first step, and when it will lead to something more significant is if eventually they end up leading to the repeal of the embargo.
Do you think that will happen? And if so, how soon? Because as we mentioned, a lot of the president's political critics on the Hill have said fundamentally, not on my watch.
Well, while there are some critics to it, I think that the momentum has been shifting to more people thinking that we need a new policy of engagement, and that includes not only politically but commercially. And so I think that the momentum shifting over, it could be something that we would hope would happen within a year or two.
Will any of the changes that you see coming out of today's announcement be of the sort that could materially affect the stock market values of U.S. companies? For example, if an airline or a cruise line is able to go into Cuba with some regularity, is it of a scale that will affect their profits immediately or not?
Well, eventually it could. Right now, as I mentioned, it's still too early to tell because we don't know what the specific regulation changes are going to be to travel. So certainly what we heard was that there will be a lifting of the travel restrictions, and that it would also be much more convenient for U.S. Travelers to go to the island because they would be able to use ATM cards or their credit cards, which is something up to now they have not been able to do. In addition, we believe that what the president was saying is that he's going to lift the special license restrictions. So now you will be able to go, maybe not for tourism purposes, but you'll be able to go by just making a declaration of what the intent of your travel purpose is, as opposed to applying through a governmental agency to be allowed. So certainly that could increase the number of tourists that we see there.
So quickly, Fernando, what will this mean for the domestic economy in Cuba?
Well, as you mentioned earlier, over 80% of the economy is controlled by the Cuban government. And so right away, we don't know how much it's going to be an effect to that part of the economy, because that's in a part of the economy that's in great need of capital. And the restrictions that are going to be listed, I don't think are going to affect that. What I think it will have a more direct effect is there's always talk about lifting the ability of remittances from the United States to Cuban businesses. And so for the small entrepreneurial class that is just now starting to develop in Cuba, it could have a more significant effect for them.
All right, Fernando, thank you very much for being with us tonight. Fernando Donaire with Inca Investments. Well, now to another global hotspot, Russia, where consumers rushed into stores today to buy up big-ticket goods as prices shot higher amid crippling economic sanctions by the West and more volatility in Russia's currency, the ruble, which actually regained some value today. Jeff Cutmore has more for us from Moscow.
The dramatic decline we've seen in the Russian ruble this week has sent Russians into the stores. They've been buying electronic goods and cars as a way of both trying to beat inflation and also trying to preserve the value of their wealth. Over the course of 2014, the Russian currency has lost more than half of its value against the dollar and the euro, and that has had very painful effects here on consumers. It has pushed the value of many foreign goods well out of their reach. The authorities here have responded by dramatically lifting interest rates to 17% and trying to intervene in the currency markets in a scramble to defend the Russian ruble. At this point, these attempts don't seem to be working very successfully. Jeff Cutmore reporting from Moscow.
And still ahead, the part of the housing market that could be very, very active in the coming year. A stunning late-day development in the saga over Sony Pictures' controversial film The Interview in the wake of a massive hack attack at the studio, which led to unspecified threats against moviegoers looking to see the film. Julia Borston joins us now with more from Los Angeles. Julia, late-day developments here, the likes of which I've never heard before.
Absolutely, Tyler. Really shocking news here. Sony announcing that it's decided to pull its scheduled December 25th release of the film The Interview, issuing a statement which says, in part, quote, Sony Pictures has been the victim of an unprecedented criminal assault against our employees, our customers, and our business, all apparently to thwart the release of a movie they did not like. We are deeply saddened at the brazen effort to suppress the distribution of a movie and in the process do damage to our companies, our employees, and the American public. Now, Tyler, the decision from Sony to pull the release of the movie comes on the heels of the exhibitors of all of the theater chains reacting to those threats, the 5 largest theater chains saying they've decided not to run the movie.
How much, Julia, did this movie cost to make? And is there a possibility, however remote, that it may be released in a period of weeks or months or released to the internet via Netflix or so forth?
Well, first, in terms of the cost of the movie, the budget was between $42 and $44 million. But then there were also the additional tens of millions of dollars in marketing costs. So this was, a significant cost to Sony, not one of their most expensive movies, but it wasn't a very low budget movie. Now, as to what will happen with the release, Sony could certainly do a direct to video on demand release. And in fact, they could do direct to video on demand very soon. They don't have to wait the usual period of time after a theatrical release now that they're no longer doing that theatrical release. And as to whether it'll ever hit theaters, it's interesting that both Sony and all the theater chains seem to be leaving the door open for that. But as of right now, the real focus seems to be in allowing the Department of Homeland Security and the FBI to continue their investigations into whether there's any credibility to these threats. But certainly no theatrical release next week.
All right, Julia, thanks very much. Stunning news there out of Los Angeles. Well, Oracle's earnings halt a 3-quarter losing streak, and that is where we begin tonight's market focus. The software company managed to report results that beat estimates on both the top and bottom lines. Now, for the past few quarters, the company has struggled to gain traction in the competitive cloud sector, but its cloud revenue climbed last quarter. Shares popped initially after the bell. Before the close, shares were up more than 1% to 41.16. Look at the move there later. FedEx delivered disappointing results, though. The package delivery giant said November holiday shipping volume lower than expected, hurting margins since the company spent more money preparing for the holiday rush. Now, falling oil prices didn't help all that much, evidently, and FedEx said the drop won't have a major effect on future results. Overall earnings missed estimates, and the company reiterated its outlook, which investors didn't seem to like. Shares fell almost 4% to 167.78. Cost-cutting helped General Mills post higher than expected quarterly profits. Still, sales fell in its most recent quarter because of continued weakness in the food industry and slowing growth in emerging markets. The Cheerios maker said it would increase sales with new products it plans to introduce to appeal to consumers like gluten-free snacks. The stock rose 2% today to $52.19. On Deck Capital saw its shares pop in its trading debut. The company, which is an online lender that makes loans to small businesses, priced its shares at $20 apiece, well above the expected range. The offering raised about $200 million. Shares closed at $27.98, higher by about 40% on the day. Well, one bright spot in the nation's uneven housing recovery, a sort of boom, as the nation's nearly 80 million baby boomers finally make their big move. For some time, the boomer segment was stuck along with the rest of the housing market, but now home builders are betting active adult could be their most active segment of 2015. Diana Olick has the story.
The competition is fierce in the pool, on the court, at the tables, and among home builders taking a big bet on the 55 and older so-called active adult housing market.
This buyer is feeling better about their finances. They're also feeling better about their ability to sell their existing home, given that the rest of the housing market has improved. So we're very excited as we go into 15.
About an hour outside the city, Atlanta-based Pulte's Del Webb division has already put 800 homes into Sun City Peachtree and expects to finish at over 3,000.
Everyone talks about baby boomers wanting to live in the city and they're not going to want to move out to these active adult communities.
Yeah, I don't get that.
Steve Sutton, who's turning 59 this week, and his wife still work full-time, but their kids are grown and they didn't want the hassles of their big house anymore.
We wanted to get in here early enough to use the amenities as long as possible.
And that's the big selling point. Active means activities, too many even to fit on the activity board.
If you try to participate in all activities, it'll almost be like having a full-time job.
The only thing holding sales back, like the rest of the market, is credit.
They're actually the group, I think, that is having a very tough time getting a mortgage. Because once you retire, you can't document your income, and even though you may be wanting a 40% loan-to-value mortgage, the banks aren't making the mortgage to these folks.
That's why over 40% of buyers here paid with cash. The homes are priced between $150,000 and $380,000, but as for home value appreciation as these owners age,
I got a reverse mortgage, so I don't care.
Builders are also hedging their bets by building in phases. Some are even designing for boomers, but allowing buyers of any age.
We change product type and we change amenities quite often through these communities to adjust to changing buyer needs.
All in a bid to make sure the generations that follow will keep singing their praises. For Nightly Business Report, I'm Diana Olick in Griffin, Georgia.
And coming up, as Washington debates more funding for police body cameras, our Jane Wells went for a ride-along to see the cameras in action. And finally tonight, after several racially charged fatalities involving police, Los Angeles plans to equip 7,000 of its officers with body cameras by next summer, becoming the largest law enforcement agency to embrace the technology, just as the Obama administration wants to spend more than $200 million on the cameras. But there's one police force that has been using body cams for years. So how successful have the devices been? Jane Wells has more now from Rialto, California.
Turn off the car and see your hands.
For the last 3 years in Rialto, California, before Ferguson.
Put your hands on your back, Doug.
Before New York.
Sit down, sit down.
Before Cleveland. These Rialto police officers have been wearing body cameras.
This is what my camera's seeing live right now.
Chief Tony Farrar thought cameras might build community trust.
The whole experiment wasn't based on figuring out whether the camera was the right camera, although we did need to take a look at that. It was really more to evaluate the impact that the cameras would have on law enforcement.
That car is reported stolen, all right?
The chief used grant money to pay for a system from Taser, costing a total of $180,000. Almost immediately, there was an 80% drop in complaints and a 60% drop in use of force.
Hi, how are you?
Sergeant Josh Lindsay helped roll out the program, which consists of a camera, a battery pack you tap to turn the system on, and a smartphone app which lets you see your shot in real time and add information. After each shift, all videos are downloaded and curated automatically using Taser software.
Has it modified your behavior?
Absolutely.
But the sergeant also says the camera has affected the behavior of the public.
The couple of people that I have mentioned it to and said, hey, just so you know, I'm recording everything, that even though they might have been a little bit angry at the time or whatever, it seems like it's calmed them down just a little bit and maybe gained a little bit of compliance from them.
The reason why I stopped you is you're actually speeding a little bit.
I asked this man pulled over for speeding what he thought about being videotaped.
Now, on both sides of the party, we know that there's video evidence. Is no more of a he said, she said. Is more of a now there's proof, you know.
Hey, Douglas, step out. Keep your hands where I can see them, bro.
The chief says video clips have exonerated some officers, but also led to disciplinary action against one. However, the system isn't perfect. The cameras only work if the officers turn them on.
If you deliberately don't use the device, then you're going to be held responsible for that.
Can you delete?
No.
Not at all?
Not at all.
Chief Farrar eventually hopes to see video streaming in real time to dispatch or supervisors. However, it's clear cameras don't always stop potential misconduct, and Rialto warns technology is a tool, not a solution.
If you have a bad relationship with your community, a camera is not going to fix it.
For Nightly Business Report, Jane Wells, Rialto, California.
And that'll do it for this edition of Nightly Business Report. I'm Tyler Matheson. Thanks so much for watching. We hope you have a great evening, and we hope you'll join us here tomorrow night.
Nightly Business Report has been funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
I'm Tyler Matheson with a Nightly Business Report news brief. The best day of the year for the Dow after the Federal Reserve vowed to be patient before looking to raise record low interest rates and will wait at least until April before considering a hike. With that, Wall Street rallied big time. The Dow up 288, the Nasdaq higher by 96, and the S&P up 40. Also helping oil prices stabilizing with domestic crude closing 54 cents a barrel higher. The White House is moving to restore formal diplomatic relations with Cuba a half-century after an economic embargo was first announced. Travel and money transfer rules have already been eased and will ease more. And Sony Pictures cancels the release of its controversial movie, The Interview, after theaters pulled out of showing the film following hacker threats. And tune in to Nightly Business Report here on your public television station.